What is going on, my people? Welcome to the Apex Wealth Network. In this video, we're going to be talking about the stock market essentials. We're going to learn, understand, and profit in the market. What is the purpose of this guide? This is a comprehensive guide that's going to take the mystery out of trading for you. It's going to give you foundational knowledge for what you need to know to navigate the market and trade confidently. This is tailored for beginners who are new to the market and need clear, actionable steps. If you're an intermediate trader, you trade a little bit on the side, but you're trying to solidify your understanding of key concepts, and anyone seeking clarity on trading platforms, strategies, and real-world applications. What you will learn in this video. What set this guide apart is I'm going to show you a lot of real-world examples, give you some walkthrough of the market tools and strategies, and then by the end of it, you'll know the terms. You won't just know them, but you'll understand them and what they mean. We'll take about 15-20 minutes. We're going to cover the stock market basis. We're going to cover key trading terminology. We're going to cover and we're going to give some real world examples and risk management and strategies. My goal is to empower you to take the first step or the next step with confidence. Let's dive into the world of trading and unlock your potential in the stock market. Step 1, basic of the stock market. What is the stock market? Definition is the stock market is a marketplace where shares of publicly traded companies are bought and sold. The purpose, it allows companies to raise capital to grow, to earn returns on their investment. Example, imagine you're buying a small piece of ownership in Apple when you purchase its stock. How does it work? Exchanges. Stocks are traded on platforms called exchanges, such as the New York Stock Exchange, NYSE, and the NASDAQ. These exchanges act as a hub, connecting buyers and sellers. Trading hours, regular hours is 9:30 to 4 p.m. every day. That's the U.S. market hour. And in pre-market and after-hours trading, available for extended trading through with lower volume and higher volatility. So pre-market is before the market opens in the morning. After-hour trading is after the market's closed. Who is the players in the market? There's retail investors, me, you and I. We trade smaller accounts. There's institutional investors like large entities like mutual fund, hedge funds, pension fund management, they manage significant capital. Market makers are firms that facilitate trading by providing liquidity, ensuring that buyers and sellers can execute trades quickly. These are types of assets. Stock, ETFs, options, Forex, and crypto. Stock is when you own a company. ETFs are bundles of stocks or assets traded like a stock, like the SPY tracks the S&P 500. Options are contracts to buy or sell an asset at a specific price by a specific date. Forex is, trading currency, US dollar versus Europe's dollar. And then, not dollar, but their currency. Cryptocurrencies is digital assets like Bitcoin, Ethereum, XRP, all those different coins, the meme coins. The role of brokers in real life example. Definition: brokers are intermediaries that allow you to trade on the stock market. Popular brokers are Robinhood, TD Ameritrade, Fidelity. Key features is commission-free trading, user-friendly interfaces for beginners, and advanced tools for experienced traders. Scenario: you buy 10 shares of Apple at $150 each through your brokerage account. The total cost is $1,500 plus any broker fees. Through many platforms are now commission free. So most platforms aren't going to charge any fees. If Apple stock rises to $160, your shares are now worth $1,600, giving you a $100 unrealized gain. Common terms for the key trading terminology: stock, share, equity, bid price, ask price, spread, volume, and liquidity. Stock is a share in the ownership of a company representing a claim on its assets and earnings. Owning one share of Tesla means you own a tiny portion of the company. Share, the unit measurement for ownership in a stock. Equity, the value of ownership in a company. Bid price, the highest price a buyer is willing to pay for a stock. Ask price is the lowest price a seller is willing to accept for a stock. When trading, you want to buy the ask price and sell at the bid price. You want to buy the lowest price and sell at the highest price for maximum return. Spread, the difference between the bid price and ask price. So if the bid is $100 and the ask is 101, the spread's $1. Volume, the total number of shares traded in a given time period. High volume often means higher liquidity and easier trade execution. Liquidity, the ease with which an asset can be bought or sold without affecting its prices. Order types: market order, limit order, stop loss order, and then take profit order. The market order executes a trade immediately at the current market price. Fast execution is a pro for it. A con is it may result in unexpected prices if the market is volatile. So when you do a market order, you might pay for something way overpriced because of how volatile the trade is right now. Limit order specifies a price at which you want to buy or sell. So setting a limit order to buy Tesla at 150 ensures you won't pay anything more than 150. Stop loss order is automatically sells your position if the price falls to a specific level to limit losses. So you set a stop loss at 140 on Tesla to ensure your loss is capped if the stock price drops. Take profit order, self-explanatory. Your number that's going to take profit at, you're done. So it's going to sell your position for you when you hit the target that you want. Indicators and tools: RSI, relative strength index. And you have the MACD, moving average convergence divergence, and Bollinger Bands and Fibonacci retracements. RSI measures whether a stock is overbought or oversold. Example, an RSI above 70 suggests overbought conditions, while below 30 suggests oversold. The MACD identifies trend, direction, and momentum. Example, a crossover of the MACD line above the signal line indicates a potential buy signal. When the MACD trades higher or lower than the signal line, so they cross each other, you can tell something's about to happen. The Bollinger Band shows volatility and potential overbought, oversold conditions. Fibonacci retracement highlights key levels where prices might reverse or consolidate. My fan favorite is the Fibonacci retracement. Buy a call option on Tesla at a strike price of $200. Say you buy it when it's at $198 and it expires in 30 days. If Tesla's price rises to $220, your option increases in value. You're damn near 200 to 300% your money right then and there. Order type is when you set a limit order to buy Apple at 150 when it's at 155. When it drops to 150, your order goes through and now you're in the trade. A pattern is when we look at the ascending triangle, we notice that it's an angle pointing towards overall going up with the base that's off a trend. So if you look over here, you can see right here in this area, it broke through, it retested, and then bounced. It went through the pattern in a triangle pattern and then went up. Understanding platforms and systems. What are these trading platforms? What are you using to trade? Definition: a trading platform is a software provided by brokers to access financial markets, execute trades, and analyze market data. The purpose of it is they serve as a bridge between you, the trader, and the financial markets, enabling real-time transactions. That's how you're able to put an option in. That's how you're able to buy a share in something, because you're the trader and you're linked with the financial markets that enables you to actually purchase what you're trying to buy. Examples of platforms go into Robinhood, Thinkorswim, Webull. I personally use Robinhood and Thinkorswim, and I do a lot of charting on Webull. I technically like Thinkorswim more than any of them, but I use Robinhood the most. Key features of trading platform: you get market data access, so you get real-time data or delayed data of a stock, option, ETF, and Forex. So you see the price of an option or a call. You see a price of a company live. Some of it is delayed, so you gotta be careful when you're looking at something that's delayed. You gotta know what you're looking at. Charting tools on these platforms, you can use the charting tools that they provide. That's why I use Webull, but I also use TradingView. That's the best one to do. Order placement, you can place market orders, limit orders, stop loss, all that. You can also set your stop losses on there. You can also place an order for when it's going to hit a certain price you get in. Portfolio, you can track your investment, your performance, and your risk exposure in one place. So if you notice on Robinhood, when you look at the top, when you see investing right here, you're going to notice sometimes you're going to see a drop down arrow right to the right of it. You can see you can switch between your accounts. That's what it really means. Navigating the systems. Account type, you can have a cash account or a margin account. A cash account means you're paying in full for your trades. You're not borrowing anything. You're not margining any money. Margin account means you're borrowing money from the broker to trade large. So you get a higher, but you get interest on the borrowed funds. Order workflow. This is your workflow that you should write down. A, select the stock and asset that you want to trade. 2, most of the time it's going to be market, but choose your order type. 3, you're going to enter the number of shares or contract that you want to buy. And then the last one, confirm the order and watch your execution. Broker fees and costs. You don't really have to worry about this too much on some of these apps because some of them don't charge you a broker fee and commission, but do pay attention because a lot of these brokers make their money through the difference between bid and ask price. Sometimes the spread is ridiculous. That's to let you know it's inflated. Real world example of using a platform. Scenario, you log into Robinhood, decide you want to buy 5 shares of Apple 150. You place a market order and it executes immediately at 150. Later, you set a stop loss order at 145 to protect against any downside risk. So the best practices I would suggest for you starting out is start out with a demo account. Especially on Webull, start paper trading because then you can start doing research, which is going to help you in the future. You're going to start analyzing. You can start like you can do analysis on the companies you're looking at. That's going to help you with the future. And then you can start using AI in all of this that I teach you in the Patreon. And then you can start demo trading these things for you. So now you can start putting trades in with paper money that's not your money. You won't make anything, but you won't lose anything. Then you can use mobile for quick trades. You can use desktop. I use that for my analysts. So I like to analyze the charts and things like that on my computer screen. It's bigger. How to analyze stocks. We're going to slide through this one because it's kind of a little bit of back of what we talked about earlier, just more in depth. There's fundamental analysis and technical analysis. To summarize both of them, fundamental is what the company is doing in the real world. So company, what their financial health is. Are they making money? Are they losing money? What's their market position? Are they valued in the market? Do people see these companies as a big boy or a sleeper? And what are their potential to growth? How are they going to grow? Are they growing in a good way? Are they growing in a bad way? What's their potential of growing? Then it involves analyzing financial statements, industry trends, and macroeconomic factors. Technical analysis is price charts, historical data, and patterns. So earlier we talked about the Fibonacci retracement, and those patterns where we set a resistance line, that's technical analysis. That's how we're technically looking at a chart to make an analysis of what's going to happen. Fundamental analysis breakdown, key metrics. I'm not going to go down into the formula because you won't really use this as much, but you need to know this. Earnings per share, EPS, price to earnings, the PE ratio, the debt to equity is the DE ratio. And then a lot of things that factor in for these companies are the revenue growth, the profitability, the management team, the leadership quality. The example is analyze Apple's yearly revenue growth in comparison to competitors like Samsung. Technical analysis breakdown. Chart patterns, very important. This is one of the best parts of trading. Support and resistance level. Support is where a price level where buying interest is strong enough to prevent further decline. And then resistance is a price level where selling pressure is strong enough to cap gains. A common pattern is the head and shoulders. It signals a reversal. The flag and pennants indicate a continuation of a trend. And triangles show periods of consolidation before a breakout. I love triangle patterns because it shows you what you kind of close the gap, literally just like this. You close the gap into where you know right here something's going to happen. Something going to happen right there. Indicators, the RSI we talked about earlier, the SMA, the EMA, the MACD, the Bollinger Bands. Volume analysis is high volume often confirms price movement. So a breakout above resistance with high volume suggests strong buying interest. Something's at 250 and the resistance at 252. It hits 252 and the volume jumps. The volume could be 4 million instead of 2 million. That means how many people's really trying to do the same trade as you. So as the volume increases, I'm realizing that it's probably going to hit 54 next. Combining fundamental and technical analysis. You want to put both of them together because the more info you get, the more confidence you get into what you're about to do. You want to confidently trade. You don't want to be unconfident. You want to have confidence before you trade so you can know what you're doing. A real world example, you review Apple earnings report and see a 20% revenue increase year to year, and the P ratio is below the average, the industry average, signaling potential undervaluation. That's like those little things right there can show you what's going to happen in this company. A step-by-step for stock analysis: start with the fundamentals, analyze the chart, look at the volume and the indicator, and then formulate your trading plan. We implement all of this with AI in the platform on the Patreon for the Apex Wealth Network. Join up if you're not already in there. Join, because we're going to teach you how to implement all this with AI. I have AI do 99% of this for me, and the 1%, which is more than 1%, but the percent of it that I do is just my knowledge picking what I want to be looking at. Best practices: start with large cap stocks, ETFs for lower risk. I would say this is very true, but I also want to tell you, in the Patreon, we focus on the low level trades because it's less money you're spending. And your goal is to turn $50 as your working income every week into hundreds of dollars. That's the main goal. And we're going to switch up our methods. We're not going to use the same methods. If you look at the chart patterns, there's 4 rows and 4 chart patterns on each row. We shouldn't use just one chart pattern. We should use multiple chart patterns. All right, step 5, risk management and strategy. The importance of risk management. This is the most important step. Definition: what is risk management? Risk management involves identifying, assessing, and mitigating potential losses in your trade. Why this matters is because it protects your trading capital and ensures that you can continue trading after a losing streak. You're not going to hit every trade. You might not even hit your first trade. You might not hit your second trade, but you want to be able to take a third and fourth trade. You don't want to put everything in a first and second trade and blow your account. That's bad risk management. When I first started out trading years ago, I had terrible risk management. I would put almost the whole account in one trade. And sometimes it worked, but 98% of the time it didn't work. So I'm here to tell you and teach you that we have to have discipline and work on our risk management. That goes in life as well. So it helps you maintain discipline and prevent emotional decision making. A trader risks only 2% of their total capital on a single trade to minimize their impact of losses. So, core principles of risk management: position sizing. What's the size of your position that you're trying to get into? The formula is position size equal risk amount / stop loss distance. If you're risking $50 with a stop loss, set $5 before the entry price, buy 10 shares. Set a stop loss. For Tesla at 200, set a stop loss at 190 to cap potential loss at $10 per share. Your R&R, your risk to reward ratio. Aim for a minimum of 1 to 2. You risk $1 to gain $2. You don't want to risk $1 to gain 50 cents. That's not making good money. And diversification, man. I watch EYL University, and there's a master investor, Ian Dunlap. 2 tech, 2 index. That's diversification. You can't just put all your eggs in one basket. You gotta put them in different baskets and let the eggs grow out to have more babies for you. So this is our strategy. We're gonna set our goals. We have short term, long term. Short term, we're gonna day trade and swing trade for quick gains. Long term, we're gonna look at the best companies like like AMD, like Nvidia, like Tesla. Those are long-term investments because I know long-term, Elon's building robots. AMD is building out your chips. They're going to build out your cloud. These things are needed. Nvidia is your chips, your GPU, they're trying to build everything. That's not going to fall off the face of the earth tomorrow. And then we're going to day trade, fast-paced, holding for minutes to an hour, using our tools. We're going to swing trade. We're going to swing a trade into days to weeks. So we might see something that looks good now on the chart, and a breakout's coming in maybe 2 weeks. So we might get in now for that breakout. And then long-term investing is years of investing. You want to hold a company for 5 years. You want to define your entry points and your exit points, and you want to back test your strategy. Look at the history of the chart. The history of the chart is going to show you if when it hits this level, is it going to keep bouncing? Or is it going to break through, drop down? Then we're going to look at the news around the company to back test what we're talking about. Mitigate emotional trading. We're not in here to be emotional. We're here to make money. Common pitfalls that a lot of people go through, I go through a lot sometimes as well, is FOMO, Fear of missing out. You jump into a trade due to the hype. So you jump in and then it screws you over because you did no research. You didn't research nothing. You just wanted to catch some quick money. It doesn't work like that. Revenge trading, trying to recover losses by doubling down. I had a trade the other day that I hit and I lost maybe 20%. And I went back into the same trade in the upside to try to gain my 20% back. Didn't work out. How to stay disciplined. Stick to your trading plan and predefined risk levels. Use automated tools like stop losses and take profit orders. And we throw AI into all of this. AI is going to make your life easier. Real world example of risk management. You have a scenario. You have 1,000 in your trading account. You risk 10% of that account, which is $100 on the trade. If you see Tesla at a $200 stop loss, Tesla's at $200 with a stop loss set at $195, you're risking $5 per share. A pro tip for success, we're starting small because we want to build confidence. We need to see wins. When I started out, especially with my community, growing with my community, the main thing I preach about is consistently training your mind. Your mind's going to make you a good trader. It's not how much money you have that makes you a good trader. It's how your mind reacts to what's going on. Because if you're emotional, you're going to take your money out before you even make any money. I've done that at times. So you want to start small so you can program the little wins. A $10 win, a $20 win, a $30 win. That's cool because now you're seeing it's working. Track your performance. Put a journal in there. Take note of when you enter and exit these things and see what the outcome was and put the reasoning why this happened. I'm doing that as we speak more because I need to do that more. I need to journal more. Focus on probabilities. No probabilities. No strategy is 100% correct. Is accurate. Aim for consistency over time. You will become profitable in trading if you trade a long period of time. You might not be profitable your first month or 2 months into trading. You might lose some money. You might lose a quarter of your account. But you have risk management that you have a whole another 75% to work with still instead of losing the whole account. That's the main game of the market for us. This is a money printing machine, and we're going to use this machine to print us as much money as we can to be rich and take care of our families and set up these businesses and set up our future for our children. So your name and your last name is an asset and it never dies. Right at the end, I'm going to show you some charts after this real quick just to give you a quick rundown of what I've been kind of talking about. Understand the basics. The stock market provides opportunity for growth, but success requires knowledge and discipline. Learn the language. Master key terms like options, delta, RSI, and support/resistance to navigate the market confidently. Use the right tools. Leverage trading platforms, indicators, and chart patterns to make informed decisions. Manage your risk. Always protect your capital by using proper position sizing, stop loss levels, and realistic risk-to-reward ratios. Combine strategies. Use fundamental analysis for long-term investments and technical analysis for short-term trading. I'm going to set you up to be a profitable trader. Join the community. Continue learning with like-minded individuals to learn at a faster rate to see how profitable you can really be. So I want to show you SPY first on the chart. This is the duplicate of the S&P 500 as an ETF. So if you notice, the yellow line is our trend line right here. And then we have our other trend line right here. You notice, boom. If you notice, it taps the trend line 1, 2, 3. Third tap usually tells you something's about to happen. 1, 2, we're not going to count that. 3, it broke through. Right here is where you notice it broke through, went back up, retested, like we showed earlier, and then went back down. And now it's consolidating itself sideways in a whole new trend. And we're gonna track this trend actually. We can do it on the charts. I can kind of show you how we do that. But you see this right here is a level, and then you have this level right here that we would start looking at. And then you can see it's gonna start pushing out. It's starting to push out this way. So we can see like low key gonna be going in a downturn if it breaks, but it could break through this right here. And that's going to let us know it's going back up. That's technical analysis. That's how we're charting things. We're going to look at Ford. I've been looking at Ford for a couple weeks. As you can see, 1 touch, 2 touch, 3 touch. The 1 touch up here, another touch up here. Now we're in this long trend. This is good for the weekly chart. So 1 week. If you look at the weekly chart, sometimes it looks confusing, but you just see it's a trend line. And then we have our 2 resistance line. If you notice, Ford has touched the same resistance line 3 times. That's letting me know at $14, this company makes some type of movement. Either back down because it hasn't broken through. The one time it broke through, it came right back down. So that's letting me know $14 is a big resistance level for this company. But I also know that $8.80 is a resistance line because I see it touch 3 different times. 3 different times. Now it's going sideways. So I'm looking for a play soon in Ford because I know if it breaks through this, it might go back down to this resistance line. So I can get it from 10.17 down to 8 something if I put a put option in. Or it can keep going up and go towards the other resistance line, which is 14.02. Because if you notice, there isn't too much resistance in between. And another way we make these resistance line is you see where there's a movement or a change in the market for this company. So there's also resistance at $12.32. So this is free game right now for someone that would love to get into trading and for something cheap. Right now, Ford is at $10.17 post-market because the market closed 2.5 hours ago. There's a resistance. There's an immediate resistance at 12.32 and an actual real resistance at 14.02. If Ford keeps going up past $11, the next thing stopping it is $12.32. So if you're going to look into the market, you can get a call option on Ford for $12. Because if it's at 10 something now, there's no barrier in between this. But if it starts dropping, I know the barrier is at $8.80. That's a quick little rundown on how we do this and how the market works for us. I wanted to make this short and sweet to give you insightful knowledge on how to get started and be confident in trading. You got this. You can do this. The market is a money printing machine and you know how to print money out the machine. It's not going to be good at all times. I'm still down from weeks ago from when I got hit. It happens, but I'm being as consistent as possible with discipline. You will become profitable with discipline. You will become successful in life with discipline. You will become a better man or a better woman with discipline. Discipline will bring you anywhere. That's all I got for you today. I appreciate you watching this video. If you watch it to the end, I appreciate you to the max. Join the Patreon. Start learning and earning with like-minded individuals. 2025 is that you're going to take the quantum leap in your life. Start taking it. Peace.